So friends, cash flow ratios. These are basically divided into two sections. One is the performance ratios and one is the coverage ratios. Performance ratios is basically about your margin percentages in terms of cash flows with respect to assets, with respect to revenues, etc. And coverage ratios are basically your ability to reinvest or repay your debt. So we will get into the specifics of each of them. First of all, let us define what is cash flow from operations. So cash flow from operations, friends, can be defined as net income plus non-cash charges, for example depreciation, minus increase in working capital. Increase in working capital, right? From one period to the other. This is the cash flow from operations. So having said that, we proceed to the ratios, friends. Cash flow to revenue. This is basically CFO by net sales. Obviously, you want this number to be high. Cash return on assets. This is cash flow from operations divided by average total assets. You want this number also to be high. Average total assets is basically assets in the beginning of the period plus assets in the ending of the period divided by 2. Cash return on equity. This is CFO by average shareholders equity. Average shareholders equity. Obviously, you want this number also to be high. Cash to income. This is CFO divided by operating income. You want this number to have some parity and balance. You do not want drastic difference between cash flow from operations and operating income for continuous periods. If there is such a difference, then this means there is a question mark in the performance. Cash flow per share. This is CFO minus preferred dividends divided by number of common shares outstanding. Number of outstanding shares. Debt coverage. This is CFO, cash flow from operations, by total debt. Total debt means interest bearing short-term debt and long-term debt. So obviously you want this number to be high. Interest coverage. This is equal to CFO plus interest paid plus taxes paid divided by interest. This multiple should be as high as possible, preferably. Reinvestment ratio. This is basically CFO divided by cash paid to retire long-term debt. Cash paid to retire or repay long-term debt. Investing and financing ratio. This is the ratio between cash flow from operations and cash outflows from financing activities and investing activities. So CFO divided by CFI minus and CFF minus. Cash flow from operations divided by the sum of cash outflows from investing activities, CFI minus, and cash outflows from financing activities, CFF minus. This is the ratio which is called investing and financing ratio. Then there is one more ratio which is called the dividend paid ratio. Dividend paid ratio. This is equal to CFO divided by the dividends paid. So that's it, friends, for this chapter of cash flow statements, understanding cash flow statements. We have covered a lot of ground in the last 3 chapters, which was about understanding financial statements, that is balance sheets, income statements and cash flow statements. I would urge you that keep watching the videos in this channel, because full chapters and topic wise classes both will be coming in a lot of numbers in this video continuously. And also I would definitely recommend you joining our CFA Level 1 and Level 2 curriculums. The batches start in May end itself. Do inquire for it. This has a lot of benefits for you. We will be doing one-on-one counseling sessions, we'll be doing study planning with you, and then we'll give you support in terms of full chapter audio visuals, weekly doubt clearing sessions which will not end till all your doubts are cleared, practice sessions, their analytics and solutions, mock tests, their solutions, analytics and feedback and guidance, and one-on-one sessions at periodic intervals to guide you through the program. Do consider joining them. They will be very helpful. I can guarantee you that. Till then, keep watching the videos and subscribe to FinaVision. If you find these videos valuable, do like and share them, and please subscribe to the FinaVision channel. Thank you so much.